Welcome back, everyone, to the Deep Dive. It is Monday, April 14th, 2025. We're jumping straight in.
Let's do it.
Crypto markets first. Good news, I think. Bitcoin price is looking a bit healthier than the last couple of weeks.
Yeah, a little bit of a spring in its step, you could say.
And that talk about tariffs seems to have died down a bit, maybe. Less noise there.
Seems like it, yeah.
Now, you're here because, well, you want the key info, fast, no fluff. And that's what this deep dive is all about.
Exactly. We've gone through, the recordings, articles, all of it.
The whole shebang.
To pull out the really important stuff. Save you the time wading through everything.
Because the crypto world, it just doesn't stop.
Never does. So today, quite a mix. We've got some potentially, positive signals from the U.S. regulators, the SEC, under the current administration.
Okay.
Then there's Israel looking seriously at CBDCs, central bank digital currencies.
Interesting contrast there.
Definitely. And BlackRock, the sheer amount of money flowing into their digital assets is something else.
Billions, right?
Billions. And then we'll touch on some pretty cool AI stuff happening out of Dubai.
So the mission today.
Connect the dots. See what these big moves, regulation, CBDCs, institutional money, AI might actually mean for crypto and, maybe finance more broadly.
All right, let's get that snapshot then. Global crypto market cap right now.
Sitting around $2.68 trillion.
Okay. Did see a little dip, though, in the last 24 hours.
Yeah, just under 1%. Down 0.84%, to be precise.
But the volume, the trading volume, that's picked up.
It really has. $79.03 billion in the last 24 hours. And get this, that's up over 10%, 10.75% actually, compared to the average of the last 3 Mondays.
Wow, okay. So more activity, people are trading.
Seems like it. And a big chunk of that is on Binance, nearly $7.9 billion.
Right. And DeFi's share.
DeFi's volume is about 6.4% of that total 24-hour market volume.
Now, connecting that to TVL, total value locked in DeFi, that's been trending down a bit, hasn't it?
It has, yeah. It's currently around $89.5 billion, which, sounds like a lot, but if you remember early 2020.
Oh, yeah, it was way higher.
Way higher. Closer to $240 billion back then.
Makes you wonder, doesn't it? What pulled that value out? Maybe things like the BlackRock and Grayscale ETFs launching, capital moving elsewhere?
That's a really good question. It's likely a combination of factors, but the ETFs certainly shifted the landscape for accessing crypto, especially Bitcoin.
And speaking of shifts within DeFi, Lido's not the top dog anymore for TVL.
Nope. Eigenlayer has overtaken them. That's a pretty notable change in the staking and restaking world.
Interesting. Okay, NDXs, decentralized exchanges. What's their share of the volume?
Right now, about 26%, 26.12% to be exact.
Which, okay, but ideally you'd want that higher for, true decentralization, right?
Exactly. A lot of people in the space feel that seeing DXDON as somewhere in the, 40 to 60% range would be a much healthier sign of a widely decentralized ecosystem.
So centralized exchanges still rule the roost for volume?
For now, yes. Though some DXs are doing serious numbers. Uniswap's at $1.62 billion. PancakeSwap's much lower, $77 million. But then you've got Orca and Solana at $576 million. Pump.fun at $517 million. Meteora at $428 million. So there's definitely activity.
Just not dominating the overall market yet.
Not yet.
Okay, let's shift to stablecoins. The plumbing of the system, really.
Absolutely essential. Their 24-hour volume is massive. $73.18 billion.
Wow. And their dominance of the total volume.
Get this, 92.61%. Almost all trading volume involves a stablecoin on one side.
Incredible. And Tether USDT is still king.
By far. Over $61 billion in volume for USDT. Then you've got Circle's USDC at $9 billion and FDUSD, that's First Digital stablecoin, at $2.19 billion.
It just shows how critical they are for, moving value around, trading.
Couldn't function without them at this scale, really.
Okay, the big two. Bitcoin and Ethereum market caps.
Bitcoin's at a hefty $1.68 trillion. Ethereum, quite a bit lower at $195 billion.
And Ethereum has that burning mechanism, right? Taking some ETH out of circulation with transactions.
That's right, the EIP 1549 update. It adds a deflationary pressure, which is a key difference from Bitcoin's fixed supply schedule.
Trading volumes. Daily.
Bitcoin's seeing about $30.5 billion traded in 24 hours. Ethereum, around half that, $15.2 billion.
And the dominance figures reflect that too.
Yep. Bitcoin dominance is strong at 62.7%. Ethereum's is about 7.3%. Shows you where the market weight still lies.
Yeah, this idea that came up because of the tariff discussions, Made in America tokens, What are we seeing there?
Yeah, it's an interesting framing. If you look at top tokens by market cap that might, loosely fit that label, Ripple XRP is huge, $125 billion market cap.
Oh, okay.
Solana at $67.67 billion, then Circle's USDC stablecoin.
Yeah.
$60.07 billion market cap. I was actually a bit surprised it was that high.
Me too. $60 billion for USDC's cap. Then you have Dogecoin.
Dogecoin at $24.67 billion and Cardano at $22.80 billion.
Quite
a mix, really.
Definitely a diverse group. Reflects different origins, maybe different regulatory standings in the U.S.
Probably a bit of everything. Now, let's look at prices and recent performance. Bitcoin.
Okay, BTC currently trading around $84,834, down just under 1% today, but up almost 9%, 8.72% over the last week.
Nice weekly gain. Ethereum.
ETH is at $1,634, down a bit more today, 1.68%, but still up 3.45% over 7 days.
Okay. And XRP, Ripple.
SRP has had a really strong week. It's at $2.14, down slightly today, 0.84%, but up over 13%, 13.17% in the past 7 days.
13%, wow. Any reason for these bumps, especially the weekly gains?
Well, some analysts are linking it to reports of lower inflation under the current administration. And lower inflation can sometimes boost risk assets like crypto.
That makes sense. Macro factors are always playing in the background.
Definitely. And speaking of macro, the Fed's next big meeting, the FOMC, isn't until May.
Right, no meeting in April.
Which some people think might actually be helping stability right now, like removing one potential source of market jitters for a few weeks.
Could be. Less uncertainty in the very near term.
And if people want the official word on those tariffs we mentioned.
Best bet is the official sources, White House website for policy docs. And apparently, the person to follow for Treasury updates on this is Scott Bessent, the Secretary of the Treasury.
Good to know. Okay, that tees up the regulatory picture in the U.S. nicely. Seems like things might be shifting under the current administration.
Yeah.
More constructive.
That's the feeling, yeah. The SEC seems to be taking a different approach. A big sign of that is the crypto task force they set up, led by Commissioner Hester Peirce.
Crypto mom.
The very same. And they're not just talking, they're holding these roundtable discussions.
Right, I saw that. They already had one on April 11th about trading regulations.
And more coming up. April 25th is on sort of key crypto considerations overall.
Okay.
May 12th gets into tokenization, moving assets on-chain.
Interesting.
And then June 6th is focused on DeFi, decentralized finance, and they're framing it around the American spirit in crypto.
Trying to understand it, engage with it, seems positive.
It does. This task force, launched back in January this year, their stated goals are pretty clear. Develop clear guidelines, figure out realistic ways for projects to register, improve disclosures, and use smart enforcement, not just, suing everyone.
Right. More guidance, less guesswork. You can find info on the SEC site, I assume.
Yeah, there's an official link with more details. And another big piece here is the new SEC chair, Paul Atkins.
Ah, yes. His appointment got a lot of attention.
It did. He's explicitly said he wants to bring clear rules using a rational, coherent approach, which is quite a contrast in tone from the previous leadership.
Definitely. I think I saw a quote from Coinbase's chief legal officer, Faryar Shirzad, calling Atkins' confirmation the dawn of a new era.
That's strong language. Shows you how much the industry is hoping for a change in direction there.
Okay, so potential progress on U.S. regulation. Now let's jump to a totally different concept. CBDCs, central bank digital currencies. Israel's looking into this.
Very much so. They're exploring a digital shekel, and there was actually a study done by KPMG in Tel Aviv about public interest.
And what did they find? People interested?
Quite interested, actually. The study found over 51% of the people they asked showed high interest in using a digital shekel.
Yeah, okay, over half. But how does a CBDC like that actually compare to something like Bitcoin or, the whole idea of open blockchains? They seem really different.
They are fundamentally different. You could almost say they're kind of exactly opposite in their core principles.
Okay, how so? Like the Satoshi principles?
Exactly. If you think about those core ideas, sometimes called the 6 pillars of open blockchain, let's break them down versus a CBDC.
All right, pillar 1.
Open source. Bitcoin's code, it's out there on GitHub. Anyone can look at it, audit it. A CBDC's code, almost certainly closed, proprietary, controlled by the central bank.
Okay, big difference. Number 2.
Permissionless. You don't need anyone's permission to download a Bitcoin wallet, run a node, send a transaction. It's open. A CBDC. You'd absolutely need permission from the central bank or its designated intermediaries to participate. It's inherently permissioned.
3.
Borderless.
Hmm.
Bitcoin works anywhere with an internet connection. Remember that transaction relayed from space?
Yeah.
CBDCs are national by design. A digital shekel works in Israel, a digital dollar in the US, geographically restricted.
Right. Pillar 4.
Censorship resistance. It's incredibly hard, practically impossible for any single entity to stop a valid Bitcoin transaction. That's a core feature. CBDCs. They could easily be designed with censorship capabilities built in, for AML, CFT, compliance, sanctions, freezing funds.
Okay, yeah, that's a major difference in philosophy. 5.
Neutral. Bitcoin treats every user the same. The protocol doesn't care who you are or where you are. Your experience is the same. A CBDC could have different rules, different apps, different access levels, depending on who you are or where you are within the country. Not necessarily neutral.
And the last one, 6.
Publicly verifiable. Anyone can download the Bitcoin blockchain, verify every transaction back to the beginning. Radical transparency. With a CBDC, sure, transactions are recorded, but the ledger wouldn't likely be public in the same way. Verification and transparency would be controlled by the central bank, much more opaque.
So when you lay it out like that,
Yeah,
CBDCs really don't follow that open blockchain ethos at all.
not even close. It makes you think, if a government truly wanted the benefits of decentralization, transparency, permissionless access, wouldn't just adopting Bitcoin make more sense than building a centralized digital currency?
It's a compelling argument. You get the tech without having to build and control it centrally.
And think about the core problem Bitcoin solved: double spending. Satoshi's genius was solving that in a decentralized way. With a CBDC, the central bank just decrees that there's no double spending because they control the ledger. It sidesteps the hard computer science problem, but relies entirely on trusting that central authority.
Which is the opposite of Bitcoin's don't trust, verify idea.
Precisely.
Okay, fascinating contrast. Let's move to institutional money. BlackRock. Huge news there, right?
Massive news. In the first quarter of 2025, they saw $3.4 billion flow into their digital asset products.
Just in Q1. Wow.
Just Q1. And that brings their total assets under management, AUM, in digital assets to $50.3 billion.
$50 billion in crypto-related AUM for BlackRock. That's staggering.
It really is. And the main driver, as you'd expect, was the huge demand for Bitcoin ETFs.
Their iShares one? IBIT.
Exactly. IDIT was a runaway success. But actually, BlackRock had a record quarter overall across all their ETFs, not just crypto. They pulled in $107 billion in total inflows.
Okay, so huge demand for ETFs generally, and the Bitcoin one was a big part of that success.
Definitely. It just underlines how much interest there is from both big institutions and regular investors in getting crypto exposure through familiar regulated channels.
It's undeniable validation in a way, isn't it? Having the world's largest asset manager so heavily involved.
It did certainly lends a layer of legitimacy and accessibility that wasn't there before.
Although, there's another side of that coin, right?
Uh-huh.
We saw an article making the point that maybe these ETFs mostly benefit the big financial players like BlackRock, and maybe they aren't really in the original spirit of Bitcoin.
That's a valid critique you hear from some in the community, yeah. The argument is that ETFs centralize access to a decentralized asset, kind of missing the peer-to-peer point.
But on the other hand,
You could argue that this institutional involvement, this scale of investment, builds trust, brings in liquidity, makes the market more mature, potentially benefiting everyone in the long run.
so it's complicated. Depends on your perspective. Do you prioritize the original cypherpunk ideals or the practicalities of mainstream adoption?
Exactly. There are strong arguments both ways. It's not black and white.
Okay, let's pivot now. Dubai and the UAE. Some interesting AI developments happening there.
Really interesting stuff, yeah. Particularly from the Mohammed bin Rashid Space Center.
The space agency, what are they doing with AI?
They're using it for global disaster response, taking their high-resolution satellite imagery and applying AI to help out in crisis zones.
Like what kind of disasters?
Think recent events: volcanoes in the Philippines, floods in Indonesia, the floods in Libya. They're actively providing data and analysis.
How much are they doing this?
Apparently, they get about 8 requests for disaster relief help every week from international bodies.
Wow, that's a lot. And AI helps them handle that volume.
That's the key. It dramatically speeds up the analysis of all that satellite data. They can generate accurate assessments, maps, area studies much faster than humans could alone.
So faster help on the ground, potentially.
That's the goal. They provide imagery, maps, analysis for earthquakes, volcanoes, floods, landslides. They've supported around 40 international disaster missions just since the start of 2024.
Impressive. How does the AI learn?
It's trained on historical disaster data, so it learns to recognize patterns, identify damage, assess impact, and it can generate these insights rapidly, even working outside normal office hours. It boosts efficiency, lets them handle more requests.
And they're showcasing this work.
Yeah, they presented these initiatives at the International Space Ops Committee Week, which was actually held in Dubai recently.
Makes sense.
Yeah.
The UAE has been pushing hard in space tech, right? Weren't they first in the region with a SAR satellite?
They were first to develop and launch their own synthetic aperture radar satellite. For comparison, the leading U.S. SAR satellite was launched by SpaceX just last month, March 14th.
So they're really punching above their weight there.
Definitely ambitious. And it's not just space tech AI. There's another big AI deal announced in Abu Dhabi.
Oh yeah, what's that?
It's a joint venture between the Strategic Development Fund that's owned by the EDG Group, a major defense and tech conglomerate there, and a company called QuantCube Technology.
QuantCube. They're based in Paris.
That's right. They specialize in using alternative data for real-time macroeconomic intelligence, like predicting economic trends faster than traditional methods.
Okay, so a UAE fund partnering with a French AI data firm. What's the goal?
This was announced at the AI and Congress 2025 event in Abu Dhabi. It fits directly into the UAE's national AI strategy using data for better decision-making.
So venture will provide what kind of insights?
Real-time economic and financial intelligence. They'll use QuantCube's ability to process huge amounts of non-traditional data. Think satellite imagery, shipping data, social media sentiment, that kind of thing.
Alternative data, yeah.
To give insights to institutional investors, companies, banks, government agencies in the Middle East.
For what purpose? Strategic planning? Forecasting?
All of the above. Helping with strategic plans, economic forecasts, operational decisions, providing macroeconomic analytics tailored for the region, even dynamically tracking global supply chains and physical asset flows using QuantCube's nowcasting and geospatial stuff.
Nowcasting, like predicting the present, almost.
Exactly. Using real-time data to understand what's happening right now, not just relying on lagging government statistics.
So the big picture is deeper economic understanding, maybe better supply chain management for the region.
That seems to be the aim. The Strategic Development Fund specifically mentioned enhancing supply chain management and helping institutions navigate global change and fuel growth. It's about using cutting-edge AI and data analysis for a competitive edge.
Fascinating to see these different strands. Space tech AI for disasters, financial AI for economic intelligence, both developing strongly in the UAE.
It really shows a strategic focus on leveraging these advanced technologies across different sectors.
Okay, well, that brings us towards the end of this deep dive. We've definitely covered some serious ground today.
We really have, from the crypto market bouncing back a bit.
To the shifting sands of U.S. regulation, that whole SEC task force thing.
Right. Then the deep dive into CBDCs versus Bitcoin and open blockchains. Fundamentally different beasts.
Yeah, that was eye-opening. And BlackRock's continued march into digital assets, the scale is just immense.
50 billion AUM now. And finally, those really innovative AI applications coming out of Dubai and the UAE.
So hopefully for everyone listening, this has hit the target, getting you up to speed efficiently, giving you the key insights without drowning you in noise.
That shortcut to being informed, that's what we aim for.
So let's leave our listeners with a thought to mull over. A provocative one, maybe.
Okay, let's hear it.
Given everything we've discussed, the potential for clearer rules in a major market like the U.S., contrasting with state-controlled digital currencies like the one Israel's exploring, what does the future landscape of global finance actually look like? And maybe more importantly, what does it mean for our own individual financial freedom, our control over our own assets?
That's a big question. Centralized control versus decentralized freedom, institutional adoption versus grassroots principles. Where does the balance settle? Yeah. Exactly. Lots to think about there. We definitely encourage you to keep digging into these topics. Follow what interests you and form your own opinions.
Absolutely. The space keeps evolving so quickly. Thanks for joining us on the Deep Dive.